Happy Monday, everyone, and welcome back to Open Exchange TV. What a great weekend it was. The weather was gorgeous up here in the Northeast, beautiful and warm. It felt like it was summer. Jets and Pats had a win. England lost, which is great for me. They got beaten by Argentina on their home turf. And probably the biggest shock of the weekend was the Netherlands knocking out South Africa of the T20 Cricket World Cup. Poor old Brendan sitting there listening to me going, what the hell is he talking about in cricket? How was your weekend, Brendan?
I took in hockey heaven up at Lake Placid, so that was a dream come true more than anything. So it was great.
All right, we're not here to talk about sport as much as I'd love to, and I think we both would, but we're here to look at the week ahead in finance. Now, unless you've been hiding under a rock for the last couple of months, midterm elections are tomorrow. Most are expecting that the results will end up in a divided government between the White House and Congress, but pollsters have not been the most accurate over the last decade, so only time will tell. Brendan, what will it mean for markets? A stat I read over the weekend was that the stock market has outperformed with a divided government over the returns generated in the years following the same party controlling the Senate, the House, and the presidency. What do you think we can see?
So I think I saw the same stat last night. It said when it's divided government with a Democrat in the White House and a Republican control of Congress, the S&P has been up on average 17% a year. I just find that amazing. These stats are all fine and dandy, but there is this. I still think this period's far different than these standard stats. So if this was a normal trading year outside, like without raging inflation or lots of hatred in society, it seems these days, as I saw like in various places, I would think you could better apply a 17% number. But we have inflation wrecking balance sheets. Earnings are down, like, I think 5 points on a forward basis in the last 3 weeks. That's a big move on the forward earnings number. I haven't seen that in ages. We just went through a 20-year market history and period of market history, which was driven by easy lending and lots of money. Well, Powell there and the Fed are trying to remove all that now, or trying to move towards that. So I wonder if these seasonality stats. Actually, one more thing. These seasonality stats tend to get priced in well in advance now because every computer sees this number and they start buying ahead of it, which could explain why today we're up ahead of the election, because there's probably some seasonality about that as well. You can tell I don't buy into seasonality numbers. I just think they're hard to trade. But anyway, all I want to say is that I think the market could go up or go down. I don't think you really buy on a divided government or this or that, because these days our government is very murky. The extremes are doing what they're doing. The middle is trying to work together. Then you have elections. It's not something that really, yes, the market might be up, but I don't think it's the government driving it one way or the other. They have they can drive it down. I don't doubt that whatsoever, but I don't think they're necessarily a reason to drive it higher. So we'll see. I mean, midterms have been really quiet this year. I read very little about them. I get those annoying texts saying vote for this, that, and everything in between, but it's just been very quiet. So my view is that don't look at these numbers as a reason to buy the market. Analyze all what's going on around us. And if you read every Twitter story over the weekend, every bear in the world seems to be taking a victory lap on the outlook. So maybe that's a reason to buy.
Yeah. Oh, listen, we've also heard the stats we've spoken to a lot of different people about how, I think it's the stats like after midterm elections, how much the market rallies into the end of the year. I can't remember the numbers off the top of my head, but as you've said, like it seems very different this time. So maybe, listen, I haven't got commitment on either side of this at this stage. I've really got to see how this comes out, because as I said before, the pollsters have not been accurate for a decade now.
No.
So
like our analyst community.
Exactly. It's like, if you even go back to Brexit, I think I was saying it was like an 88% chance back then that it wouldn't happen, but lo and behold, it did. And look at the mess you see over there right now. So I don't trust the pollsters. Is the bottom line on that one.
I think there was I read over the weekend that I don't know anything about New Hampshire politics, but Maggie Hassan, I think she's the incumbent. She got like some enormous lead, and you wouldn't really know it, I don't think, if you read the papers. So I don't know who's the pollsters are getting their data from, or they just talk to Hassan folks. I don't really even know who Maggie Hassan is. We get so inundated here in Massachusetts with New Hampshire politics, which makes no sense since I don't vote in New Hampshire. But anyway, moving on.
All right. The earnings season has been lackluster so far in general, with only 70% of S&P 500 companies posting better than expected earnings compared to 85% a year ago. And 24% are missing EPS estimates versus 13% a year ago. As you'll see on the image here from Earnings Whispers, there were still some big names to report this week, and some interesting ones that I want to dig into. I want to start with Yeti. They report Thursday pre-market. Their share price has been crushed the last 12 months as we've come out of COVID and competition has really increased in their space. Throw in an environment where consumers are not necessarily looking to pay for the top end of products, you can understand this decline in the share price. Brendan, I love their products and they are the leaders in the field, but I don't think this sell-off in their share price looks like stopping. What do you think?
So with Yeti, I have this theory that with the consumer, that if you don't have a new product, the consumer probably has it already. It goes back to, I think I asked a question a couple weeks ago. Do you know somebody who doesn't have a Netflix account? I mean, everybody has a Netflix account, and probably every person with a kid has a Disney account. But with Yetis, they're everywhere. Like this weekend, I swear to God, I can't believe how many Yeti coolers I saw in people's hands. The black ones too, strangely enough. It's the same one I used to get on when I was at Morgan Stanley. The wholesalers were sharing these Yeti coolers with everybody, and they're not cheap. So they obviously struck a deal with Yeti years ago. But coming in this report, the chart is weak. That's no surprise. It started turning over last winter, right around the same time as risk dropped out of the markets, which tells you it was a PE story to some extent. It was too expensive, so to speak. I think I saw a case, Fidelity's making a case for stock last week, that with supply constraints unwinding, you could see this stock start to move higher. They're calling it a durable or a staple. I don't know if it's a durable staple. I think it's more of a discretionary product. I mean, it's nice to keep your coffee cold, or cold or hot. That's what it does for you. But is it needed? You know what I mean? You can still go to the coffee place and get a cup of coffee. So to me, it's a discretionary product. We're in an environment that discretionary is being cut back by a majority of the people out there. Those who have money still are spending on there, but maybe they're trading down. So like that's a theme that's coming back. I think we saw it this summer where those with money were trading down to the Kohl's and everywhere else. Well, is Yeti going to find competition moving down on them? I would just say that, like I said, the chart is weak. Bloomberg thinks that they saw some. It was interesting. Bloomberg said they saw some big buying in the 34 calls for this week's settlement. So if people are buying ahead of the earnings, there's not a lot of short interest. So this looks to me like somebody's betting on a better number, but I don't know how much better it can be. So the way I look at this, it'll probably be a decent number in arrears, because I think it came out of the summer okay with the consumer, and I think we're slowing down again. So they could say the back was okay, but the front going forward difficult. So the chart's telling us things are weak. The shorts may be a little skittish, but short interest is low. So I think this 34 calls that people are buying, they think there's going to be a good earnings there. I don't know. Yeti's a tough one. I think everybody has a Yeti cooler too. It's just,
to that point, the short interest is 7%, but to that point, you and I always get this together on a Sunday, and I said to you, it seems like RIM. Now, obviously, it's not technology, but everyone I know has a Yeti. It might be Yeti cooler and so forth, but they're also a victim of their own success. They last very long, these products. It's not as if they wear out. But if you've got them all, why do you need another one? If you've got the Yeti cooler, why do I need another one? They're built to last. So once you've met that sort of level, okay, what's the next catalyst? It's like there's not really an add-on to a cooler.
Yeah, no, they need other product. They need to branch out into other products they have coolers, they have cups. I mean, they basically commandeer that whole market, and they do it very, very well.
Yeah.
But if your product lasts like 20 years, it's what do you do? Like you need other products, and maybe that's what comes next. I don't know. I mean, I really do love the Yeti cup I have. I think it was sponsored by I don't know who the heck the wholesaler was, but I've been using this thing for 5 years and it still works fine. To your point, and we have another one. To me, they've become a promo gift in many cases, and I wonder if that's the pressure. They see the pressure as well. They're like, oh, geez, we're not selling as much as we do. Let's get it out through these other channels. So I think there's a lot of pressure working on them. They need to diversify their product line, stay with the same, great products that last forever. It's like a Weber grill. Those things last forever. And look at Weber's stock price; it's all the way down in the single digits. Like they need an old fashioned glitch like Microsoft used to do with Windows. Upgrade the thing every year, add something. Maybe Yeti poke a hole in the product somehow.
I had a giveaway from one of our partners, Flex Networks, and it looks like a Yeti cup, but it's not a Yeti cup.
Oh,
my wife's been using it since we got it. She goes, "This cup's great," and she goes, "Oh, it's not a Yeti." That's more to my point. And that's like, mate, listen, maybe they can open up a theme park, which leads me into the next one, Disney. They report Tuesday aftermarket. I've seen a lot of commercials for celebrating Disney World's 50th anniversary. Last I checked, that was October 1st, 2021. But who doesn't love extending a celebration, especially if you are a theme park? We've spoken about Disney a lot, Brendan, and rightfully so, with their share price down 41% so far this year. Are they ever going to spin off ESPN? Are they making the right move by increasing its streaming price service and adding an ad-supported tier? There still seems to be a lot of headwinds here for Disney, Brendan. Can these earnings stop the share price slide?
So the stock got absolutely pile drive last week. I know it was up. I know I was in hockey heaven for 3 days, but I'm looking at this chart and I'm like, what the heck happened to Disney? The problem with Disney is they're pushing away from the parks. The focus, let's put it that way. They're not giving up on Disney World parks, but they're pushing all into streaming, and their subscriber growth is tremendous. I mean, I think they're looking at 10 million new subs this quarter. Like Netflix did 2.5. I would just say that what they have, I've always liked the Disney streaming platform better because they already have the content built out. They already have the studios. They have the combination of Hulu, ESPN, and Disney Plus. I think is very potent. Xfinity used to call their thing the triple play. I don't know if they still do or not, but with all these streaming options out there, Netflix doesn't have sports. Amazon's trying to add sports. Paramount has sports and is undervalued. They get the whole Champions League, and they have NFL football streaming through CBS. Well, ESPN is a sports right now is huge, and it's ESPN is a valued piece of that triple play. So I don't think they'll ever spin off ESPN only because of that idea that Hulu's in there broadcasting it live, ESPN Plus, which I can't stand for the single reason that the Bruins aren't on television when they're streaming on ESPN Plus. It really irritates me. It irritates a lot of Bruins fans actually. It's the one time it's not on us. But with Disney, I would just say that streaming is their bread and butter. New products is their bread and butter. I will look at the quality of those streaming products is not as good as it used to be, though. And I started noticing this during the pandemic. If you're a superhero type, Marvel type, if you compare the movies to the shows, obviously the shows aren't going to generate the buzz of a movie. So now they're taking quality down and content down. So that to me is they're cutting costs in the Marvel side. They have Black Panther coming. So that might spur things. It did last time, surprised the heck out of everybody. And I think it actually drove the stock because nobody expected to do $2 billion globally. So long story short, I think a big thing in this report will be Disney parks though, however, because we've been talking about airlines being tremendously strong, pulling in higher demand, higher prices. Well, what's to say Disney can't go higher with its prices because its demand is rising as well. I think you could see a surprise in the park side because I think a lot of people did go to the parks over the last several months, contrary to what I thought would happen. And the streaming might come in lighter. I don't know. You just call me. I don't know if that's. It's kind of a contrarian thought, but I think if the parks business is good, that might actually help the stock more than the streaming saying it's good. So the stream could actually impact the stock negatively, whereas the parks actually help it positively. So it's going to be an interesting report. But I think that Parks is a wild card, and it could be better than the analyst community is giving credit for.
Yeah, I agree with you totally there on the Disney side. Like you compare content Disney to, let's just say, Netflix. Netflix, you can watch it for a very long time and watch a huge variety of content. Disney's obviously the family oriented side. And I was sitting here looking at it the other day when we went on to Disney Plus. I was like, do we really need this anymore? Like the kids are starting to get older and so forth. Like maybe the different degrees, but there's only so many times you can watch a Marvel movie.
Yeah.
And my daughter is like sort of switched off a little bit. She's more Netflix now. So, but we'll see what happens from this. ESPN, I still feel like needs to pop out, but what do I know? I'm not an analyst. It's just a generalist sitting on the side.
Well, ESPN, they've been sports in general has been seeing cutbacks. Like we have a sports radio station here, and even with being the top grossing station in the country, I think it's Beasley that owns it. They actually fired people that were really important to the production. You only do that when you're feeling the pinch. So ESPN's content costs must be rising. I mean, you're paying all this money for baseball and there's nobody in the stands. It's like I don't know. I mean, baseball is popular to some extent, not as popular as cricket. Actually, I have no idea about cricket.
But yeah, no, you're 100% right.
Cricket is like one of the biggest sports in the world, right?
Yep.
I mean, baseball is dying in many ways, but so that puts pressure on ESPN, who just shelled out billions to watch baseball. I don't know. There is legitimate change. I think ESPN is an important part of the future for their streaming offerings, because I think streaming is going to have to be more diversified than just shows. That's just to be profitable. Anyway.
My thinking on the spinning out ESPN is that grab the value of it now, because it's probably only going lower.
It's like Madison Square Garden, right? It only goes lower unless they sell a piece. Anyway.
Yes, exactly. Okay. Roblox. They report Wednesday pre-market. Full disclosure here, I've never looked at Roblox, and my kids got bored of it pretty quickly when they were on it. Some analysts are saying that the share price is undervalued, with shares down 60% year to date. I saw Seeking Alpha say that neither the Dynamic Heads or Game Fund Games soft launches in December aren't baked into the management's outlook for Q4 or the buy side, sell side estimates yet. One thing that we've learned from development on our side is that things never arrive on time or the way you want them. So maybe this is the reason why it's not baked into those estimates. Brendan, what are you thinking about Roblox?
So I went to my analysts on Roblox, my kids, because they've been really good guides on this over the last several years. What they're doing, the stock tended to follow it, which is interesting. So this is one of those stories, again, it was more popular last year than this year. They have an ecosystem. We've heard that before, like Facebook. But their ecosystem is Meta, it's gaming, it's in a growing business. However, it's interesting. And I asked my kids about this. I'm like, are you on Roblox anymore? And one of them said that she doesn't have time anymore. And the other one said, I hasn't been on it for a couple months. Well, both of those statements are true, because both of them have been very busy with activities since school started. There's no time for gaming for a lot of kids that have a lot of activities going on right now. Again, going back to Lake Placid this weekend, talking to people, everybody has their kid doing something. It's not in front of a television either, and it's not in front of a gaming console. They're just really busy. So with Roblox, I wonder if this is a very big negative. I wonder if the push to get your kid away from a screen is real right now. Get your kid out there to do something. With that said, I saw every kid looking at a phone this weekend, so we'll see how far that goes. I would say, though, that I think activities are diversifying, and that is hurting Roblox. They have a great creative network within their little system where kids can create games. My son was going to try to create one. So if you can create games from scratch and basically cost nothing to do it, that's a big deal for them. It finds new content at on the cheap, so to speak. The stock last week, interestingly, turned on the 20-week MA. It's sitting on it right now. So it makes you wonder, all right, we're at an indecision point, and the people aren't sure what's coming next. So you sit here and you're like, does one buy the story or sell the story? I think the buy is I think the way to play this is that sentiment is pretty poor on the gaming in general, probably driven because Meta has been just Facebook's got such a negative view on it that Meta stories have come negative. But Roblox is outperforming Facebook, if I keep calling it Facebook, Meta. So I would just say Roblox is sitting on support. I wouldn't be surprised if the outlook is not great. I wouldn't be surprised at the same time if the trailing numbers were great because they had a whole summer behind them. So I think, I'm not sure how the market's going to take that, but I would say that if one has more positive on it than negative, the stock will bounce off the 20-week and continue higher. I think it's trading better than a lot of stocks in this market. Its June low is holding pretty firmly. I think it's 30% off that June low. That's a big deal in itself. They still have a whole network of kids they deal with. They have a lot of, not my kids, and that might be an indication things are slowing. But I would just say that it's at indecision point. Any positive views, I think, going forward will drive the stock higher. It's always like the outlook, right? The past doesn't matter as much, always the outlook. So watch the outlook in this one. It's sitting right on support.
Well, even if you look at that chart there, Brendan, like October, November, it's probably when they reported 12 months ago. That's like as you're moving into winter. So maybe that's a catalyst for them. I don't know if I can't remember if they had new products coming out then as well. But as you move to that winter time, especially up here in the Northeast, kids are going to be more inside and so forth. Maybe that might be sort of a catalyst for them. I'm not sure.
Yeah, no, it was the one thing I will say is it was 70 degrees yesterday in November. That's not going to have kids on their screens. I think I do remember that earnings report. That thing spiked because everybody thought it wouldn't. I think they thought it was the end of the line for Roblox, and it rallied into the Thanksgiving. I can't remember what the weather was like. I can't say weather is going to drive this stock either, but it's just it's sitting on support. And I think people want to buy this thing. There's a lot of kids are out and about now, and Roblox is hard to use on a phone. Easier on an iPad. I don't know. That's just
okay. Let's move on to Ralph Lauren, and they report Thursday pre-market. All things considered, Ralph Lauren's share price being down 20% year to date is an impressive performance. But in the last 3 months, there hasn't been any upward revisions of EPS estimates from analysts. Is that because they are so confident in their numbers or just too scared to lower them? Brendan, I think there are too many challenges ahead of them here, especially in that consumer discretionary space. Do you think there's anything positive they can come out to see any significant rally?
So with Ralph Lauren, I think it's two things driving this. You got the brand, like Lulu, like brand name. You can be a Lulu and hold in even though the stock price falls, or demographics. They cater to those who have money, right? If you're buying Ralph Lauren shirts, chances are you're willing to spend a few extra bucks to go buy that Ralph Lauren shirt. That group is still spending, but it's spending less and it's trading down. So a lot of the analyst community, I think, is worried about the trade down factor with Ralph Lauren clothes. It struck me when I was thinking about Ralph Lauren this morning that back when I was a kid, you had the fake polo shirts. And I don't know how we ever got away with wearing the fake polo shirts, but I remember having fake polo shirts. So Ralph Lauren had to be hurting back then when it was the 80s. It was a slower period. However, with the stock here, it actually put in a nice turn off the lows in September. It broke through the June and July lows, or it's just June lows. It broke through those lows, pivoted on it, and bounced higher. So I'm thinking the analyst community is just not sure. They're not willing to stick their neck out. That's like they normally do. They follow wherever the stock goes. Exactly. They run. This is a tough one, though. There's a lot of factors involved. A lot of people distrust. They don't believe a brand can survive in this environment. People are getting pushed back to work, though. They're in front of Zoom screens. I'm not wearing polo myself. I'm Ralph Lauren myself. I have my Brooks Brothers whites, but I love my Brooks Brothers whites. But I think Ralph Lauren itself, it sees this potential trade down occurring. So they are ramping child's wear elsewhere. It started in Europe. They're trying to build up child's wear clothes a little bit more. That might be helped. But they have to somewhat counter this lower trade down thing. If you're buying the stock now, you better get a good outlook. That's the stock is turning on that. That 99 level, you can see that red line, which is the 200-day, 200-week. It's a big number. That has been containing action on both sides from 21 through the current numbers. The two lines are coming together. I've never done this live, by the way, looking at a chart like this. But anyhow, I've done it live, but I haven't used this chart before. Anyway, those two lines are coming together. This tells me that the story has gone sideways a long time. It's probably why the analysts aren't sure. If they can prove to the world that they're surviving this trade down and people are using their shirts, and they're going into next year with good lean inventories, that is the biggest thing with these consumer names. If inventories are lean and they're able to sell things at higher margins, which is why Lulu is doing so well. If RL can do the same thing, I think the stock breaks out. So the investors think something positive is afoot here, and I think it might be lower inventories, better margins, and surprisingly better sales.
Don't get me started on Lululemon. I still want to be short that stock.
Yeah,
you and I have had back and forth on that.
Yeah, it's all about brands, right? And it's a weird market. Like in a market where general GIS is like outperforming everybody, you're sort of like, what kind of market are we in where consumer staples beating everybody? But anyway,
no, well, I'd rather be short Ralph Lauren too. My family's been in the retail business for a very, very long time, and the environment we're going into, it just doesn't bode well for these premium brands, if you would.
No, I agree with that, but are we all too bearish on the environment we're going into? This weekend I read, again, I was off Twitter for about 4 days. How refreshing is that, by the way? I mean, Elon Musk had changed everything in like 3 days. Like the world changed overnight with Twitter, and I'm like reading like, wow, he's done a lot in 3 days. Aside from that, there is a lot of negativity out there, and I wonder if the things aren't as bad as they really are. I mean, I saw it up close and personal. This weekend there's a lot of angry people out there. People aren't happy with the inflation. People aren't happy with their wages. They're not mixing. So somebody from Ralph Lauren, the company of Ralph Lauren's type, would suffer in an environment like that. So are we in that environment really? I don't know.
Well, you're also seeing Apple cutting back on production as well. We haven't even touched on that this morning.
Well, that's a weekly occurrence. That happens every day. It happens every week these days, it seems. I could have told you that when I was shopping for that. I did tell everybody that in September when I was in that store, and the guy told me that demand wasn't that high. So this is not a surprise. You heard it here. I'm just kidding. But anyway, it's just Apple's downgrades. What do they say? You shoot the leaders at the very end of a bear market. They're usually the last ones to fall in the bear market. Well, Apple's finally falling, and maybe Ralph Lauren has already fallen. I understand your perspective completely. Want to short these guys because they've fought valiantly in the last 2 years. Like they should have been much lower than they were, but money and low rates kept them higher, and then margins and demand kept them even higher. I want to know what happens to this market when inflation turns. These guys are stuck with their margins shrinking like crazy, and sales start to really moderate. Like, what is that going to do to these guys? That's the big question. So we'll see.
All right, let's move on to like it, love it, leave it. All earnings focus again this week, Brendan. We're going to start off with Palantir. They've reported pre-market this morning. Stock's down about 2.5%.
All right, so I think we're below 8, right?
Yes.
So I'm going to go leave it on that. The 8 is the pivot. So if it was above 8, we would have liked it, but I don't. So I'll leave it. We'll leave it on that one.
Okay. Lyft report aftermarket on Monday. The following on Uber had good numbers last week, but they don't have as many tools as Uber.
Yeah, but Lyft I think is more agile, and they're laying off thousands of people I read this morning. But I like it. It had a nice turn off at 13, and they had support last week. Chart looks like Disney, interestingly enough, from last week, where it got slammed back to support. But I like it.
Okay. Beyond Meat, they report after the close on Wednesday.
All right, here comes a sad pun. I leave it because it's beyond repair.
Oh, Jesus.
That's it.
I can't even do it. No, I'm moving on to the next stock. I'm not even going to let you go any further. Rivian, they report after the close on Wednesday, and it's happy birthday to Rivian for their listing. It's their first anniversary this week.
Rivian's been a really tough one for me. We keep pivoting on 32. I'll leave it. Stock's in a trading range, though. It's hard. We got hit on this one last time. I think we were right week 1, down week 2 because it went above 32 and then drifted below 29. But we'll leave it for now. Tesla's seeing weakness, so it might be factoring into Rivian as well.
Okay, well, sticking with the EV names, and the next morning, on Thursday morning, will be NIO. They report pre-market.
So I'm not sure how I'm going to like this one, but I do. China's imploding, it appears, across the board. Or they're selling it to us this way. I'm not sure which, but I like the stock. I had a nice turn. That's a doji. That candle formation turn right there is very nice. And they're more popular in China than Tesla, if I'm not mistaken. Aren't they the number one player over there, if I'm not mistaken?
I think so, yeah.
So this is a chart versus fundamental call. Do you buy imploding China? I mean, the Hang Seng has never been this oversold. So I think NIO is an interesting play. I like it.
Okay, and the last one we're looking at, and I love these places, Six Flags. They report Thursday pre-market.
So I just said Disney. So I'm going to go guess. This is a chart versus fundamentals call. I'm going to leave it because the chart's saying to leave it. If Disney reports better numbers on the park side, which I think is very possible, Six Flags may follow. So that's your one risk, but I would leave it.
Okay, well, that wraps it up for Like It, Love It, Leave It. Before we sign off today, Friday is Veterans Day. For all those who've served, thank you for your service. And anyone out there, if you know a veteran, just go thank them on Friday. That'd be fantastic. All right, Brendan, you have a great week. We look forward to talking to you again soon.
Sounds good. Have a great week.
And for everyone else out there, good luck investing.